Well, g'day there friends and traders right around the world. Thank you so much for joining me as at this Tuesday afternoon market recap. It is the 6th of January 2015. I can humbly say that we have started this year incredibly well. I mean, going through some of our top trades over the weekend, we have absolutely destroyed the market. As the markets have broken down, we've expected and anticipated the sell-off. I'm going to walk through that very, very shortly, but in the way of overall trade setups and the way in which trades have moved, we have done incredibly well. I don't think that I personally have started a trading year as well as what we have done in 2015. It's really a testament to what we do. And I wanted to say, first of all, congratulations to all of you participating in that class. You really deserve what we're seeing, especially as we move into 2015. It's got me very, very excited to see where this market is moving for the rest of the year. Now, the Dow Jones Industrial Average today sold off another 130 points. The markets did stage a little bit of intraday or intra-afternoon rally, but as you can see, we hit our first target down here on the Dow Jones Industrial Average around 17,371. This is a target which we've had highlighted. It's old resistance which can possibly act as new support. Now, a lot of our individual trades have hit our targets, which is really good. So it means that we've automatically closed down those positions, those winning positions, which I'm going to touch on. But it's very, very timely given that a lot of the markets, or at least the three US markets, are pulling back into very logical areas of support. So while the majority of people out there in the market may be starting to panic, saying to themselves, is this market going to tank? Because we have an understanding of support and resistance and basic psychology, the psychology of other people or novices transacting in the market, we understand that this could be, in all honesty, as low as what the sell-off takes us. Now, I'm saying that because when I have a look at the Nasdaq, you can see here that we've rallied into or sold off into our 4,614 target. Again, this is a logical area of support. This is going back to September 2014. What generally happens is that we'll retest old resistance as new support. We'll find new buying pressure as we did during mid-December, and simply the trend, the macro bullish trend across all three of the markets will continue. Now, we don't have any signals like that to suggest that the markets are going to pop. The only signal which we really have is just this very slight, very small bullish rally which we saw late afternoon coming to the market. The S&P 500, again, it's blown through our first target down here at 2016. You can see the market sell off. We're coming back into an area of support, not only just one support, but there's actually three levels of support in here. So overall, the markets, yes, they've sold off. We've anticipated and expected the sell-off. We've set trades up to capitalize on the sell-off, but we are getting very close to what we call a pivot point. And a pivot point is really interchangeable with support and resistance. It's an area on the chart where we can say, look, the market needs to slow down. It may move sideways before, one, we continue in the bearish sell-off, or two, we see a strong bounce and a bullish continuation of the overall trend. That's the way I'm interpreting the market at the moment. Now, working through some of our individual top trades, Apple has been an incredible trade this week from 111 down to 107. That's all well and good. Starting to test the 105.20 trade trigger to the downside. You can see that we're at some form of a support level. We're also sitting on that 100 simple moving average. So if you did get triggered into this trade, if you were chasing trades, just set your stop at your first target based on the trade from Monday this week. Just set it at 107.47 above the high of today's candlestick. Just lock in, of course, your risk, okay? And then we'll just see how the price action moves tomorrow. Amazon today has broken down. You can see I've got one trade trigger. My personal trade trigger on this was $299.50. That's where I felt most comfortable getting into Amazon in the event that this bearish Morobozu or engulfing pattern up here was giving us a legitimate signal to the downside. Again, I've given an aggressive entry at 301.51. 305.82 was another entry which I gave to a personal or a private student which I work with. All three of these trade entries have been incredible. Today we hit our first target at $293.07. Second target on this stock is $285.98. Okay, so Amazon is starting to break down. We're getting a rejection at that 50 exponential moving average, and we're getting a rejection at this resistance line going back to pivot point in August 2014. Baba today had a bullish engulfing candlestick pattern. That's all well and good. It's sitting right on our first entry at 103.18. Just tighten your stop. Keep your stop at 104.72, and we'll see how this stock moves on Wednesday's trading session. Baidu today had a very nice high wave spinning top. It's still nowhere near our bullish or bearish trade trigger. It's pretty much in no man's land, getting stuck in all this congestion going back to August and October 2014. Not a whole lot to take away from that particular stock. Caterpillar today hit our second target. It did break below our entry at 87.53. It hit our second target at 85.77. We originally got into this position at $92.36 to the downside. And you can see we've hit both of our targets in the past 2 days trading session. So congratulations on that Caterpillar trade. That has definitely been one of the better trades over the past 2 weeks. Look at this FAS trade, 125.01 on the downside, 124.38 on the downside, 2 original entries. One we got into Friday last week, and we had a continuation trade set up for Monday. This is just absolutely tanked. Look at the volume coming back into FAS. It's really breaking down below these 2 trade triggers. And we've hit our first target here at 118.95. This was the gap support over here. So we've blown through that. I wouldn't be surprised if we hit 112.39 over the next maybe 3 days. I'm not quite sure about tomorrow. Given where the markets have traded into and the areas of support that they're sitting on, it wouldn't surprise me to see, a little bit of a bounce in FAS, but ultimately a continuation down to 112.39. So that's a pretty decent trade. Facebook today tanked. Although we haven't really given trades, or I haven't given trades in the pro class, just because of this macro bullish trend line. Facebook hasn't been, or it hasn't escaped the sell-off across, all three, the broad sell-off across all 3 of the markets. Here it is, down about $1 on a $77 share. It's not too bad. It's legitimate volumes there, and it definitely looks as if it's breaking this primary trend line, which is very, very interesting. Still sitting tight on that 74.49 entry. Look at this. Google today, 525.50 was the entry, 510 was the target. We hit that today. Congratulations, traders around the world. What an incredible trade setup. What an absolute incredible trade setup. That was $15 of intrinsic value in put options to the downside. I just wanted to say congratulations on that trade. Again, you deserve it for putting in the work, learning this analysis, and being patient, being disciplined, and waiting for those trades to set up. You need to wait for trade confirmation on high probability trades. And then it only takes, a couple of days, a week, or maybe a month to see those returns which you want to see in your trading accounts. Then you sit tight again, you wait for the next crop of trades to set up, and you just repeat the same process. You are learning that process being in that class. I want to congratulate you. And it's days like these when you need to sit back and say, look, I've done pretty well for myself. I'm happy with how the market's trading and how I'm performing. GoPro at the moment is moving sideways. It still hasn't broken out of this range. I'm excited for the downside possibility on GoPro. There isn't really much volume there, which has got me a little interested. I'm very neutral on GoPro at the moment. No real trade movement. Halliburton is still in that Bollinger Band squeeze. No real movement there. Netflix today has hit our target again. This is another trade. 338.50 was our entry. 327.79 was our target. That is another $11 of intrinsic value, just under $11. So another great trade on Netflix. You should be out of this at our target down here. Tesla today, interesting. I was looking at this trade during the day, and it was so close to our 202.41 target. Next thing I know, it's up. It was down 2.5%. Next thing I know, it's up 0.2%. So it staged an incredible late afternoon rally, which is unfortunate. It is still a profitable trade on both trade triggers. But to see this stock trading at 205 and then to see it close at 211.28, it was a bit of a surprise. So, hey, look, if you're in Tesla, just limit your risk. Put your stop above the candlestick on Tuesday. And you know what? This might be a $2 losing stock out of our trades so far this week. That's all it is. If you got in at 215.92, it's still going to be a profitable trade. So, it's really not too bad whatsoever in comparison or in conjunction with what we have achieved with our other stocks. And these things happen. No one can foresee, such a dramatic rally in the price of Tesla in the last, 2 hours of trading in, a daily session. It's just how it is in the market. So we'll see how Tesla goes. The candlestick in and of itself isn't really giving us too much information. It's sort of like a high wave spinning top. You can interpret it as really just mixed emotions, no clear direction, confusion. And that's generally what we have to do. Today, look at this. Twitter has popped. This is incredible. Twitter was up $2.38 on good volume. Now, we got very, very close to our entry here, $39.52. Would I be overly interested in trading Twitter based on what the 3 US indices are doing right now? The answer is no. Okay, the markets are in some form of retracement. they're going through a period of a pullback, and you've got one stock out of the entire list showing us a little bit of a bullish movement. Now, again, we had this tentative entry at 39.52. It hasn't triggered yet, but if you're watching this analysis and you've been in the pro class, you have to ask yourself the question, which direction are the markets moving? Which direction is Twitter moving? Am I comfortable if I get triggered at 39.52? Is there enough structure for me to place my stop? And the answer, unfortunately, if you answer those questions honestly, is no, it's not. All right, no, it's not. So please sit tight on the Twitter trade. We might see some more structure develop. Then we can move the trigger all about. But until then, just sit tight. So that's a bit of a Tuesday afternoon market recap as at the 6th of January 2015. Congratulations again. I genuinely mean that. You deserve it. It's just been an absolutely fantastic 2 weeks for us to kickstart 2015. I'm very excited to round out the month of January, or just to see where this market moves during the month of January. It's a great time to learn how to trade the markets professionally. All the best, ladies and gentlemen, traders around the world. I will see you all tomorrow for another afternoon market recap. Goodbye.